Hello and welcome to a brand new show of Market Makers. The big question for 2015 is that at global level, are we on a brink of a recession? What about US economy? Will that be the only source of growth? And when it comes to India, after a great 2014, will 2015 be a year of breakout? How should one read into the latest batch of macro data? And what about crude? Such a chaos in the biggest commodity in the world, can that really lead to a severe and a sharp financial adjustment? To discuss all that and to also identify some money-making ideas, I have with me a very special guest. And I've always maintained Nilesh Shah is one of the best stock pickers on D Street, someone who has identified not one, but dozen of multi-baggers. Nilesh, great to have you back. I know you hate me for saying this, but history is on your side. You've been one of the finest stock pickers I've met.
Thank you, Nikunj. Thank you so much for all those kind words. And I think clearly owe this performance or whatever the track record clearly to the entrepreneurs and the managements who run these companies.
And the big picture is that things are not looking all that stable. More than risk on, it is suddenly risk off for global markets.
I tend to kind of, yes, I think clearly macros have always been confusing and complex. As somebody said that we live in a VUCA world, a VUCA world, a volatile, uncertain, ambiguous and a complex world. And I think it continues to be the way it is. I don't think the macro environment has changed dramatically post-2008. The good news, I think at least, is that there is a realization that this pumping in of liquidity has really not lifted economic growth. And clearly the fort which has fallen is the commodities. That's clearly been the biggest capitulation, where there was really no strong economic growth to back up the price movements in commodities. And finally, that's given way. And therefore, you see clearly so many commodities, in fact, the entire commodity pack off significantly from their highs a year back or 5 years back. But at the same time, I think this is really a piece of big good news for the world as well. Because clearly commodities was stoking inflation, which was taking away the savings of the consumers. If we need economic growth back, be it India, be it the emerging world, or be it the global economy, we need savings to come back. And I think this fall in commodities is going to bring savings back, which is going to give more money in the hands of the consumers to spend.
Double whammy, so to speak, for us.
Absolutely, because I think on one hand, if you have costs coming down because of crash in commodities, and on the other hand, if you have productivity improvement coming in, and where you have millions and billions of people getting channelized into the mainstream, thanks to what's happening also into the digital world, I think this combination of C and D, commodities, crash of commodities, and development of the digital side, I think creates, in a way, Goldilocks situation for the world economy as well as for India.
Okay. Let me throw in one more letter, which is H, and that's the hope. 2014 was all about hope. Rather than outward looking, Indian investors were inward looking. We got a new leader. That made all the difference. The feel-good factor made a comeback. But earnings have not come back. And some would argue that stock prices have run way ahead of the real economy.
I clearly believe that, yes, I think 2014 was the year of hope. I would actually say that you mentioned we've got a new leader. And 2014 to me was the year of induction, the year of intent for the new leader. I think the year 2015 is going to be the year of implementation. That whatever you have envisaged, whatever you have envisioned, whatever you have conceived, it's time to implement in 2015. Such that the year 2016 onwards becomes the years of impact. So I clearly believe that, again, from going from the macro to the micro, I think, yes, 2014, the earnings delivery has not been there on an aggregate basis. We've got overall earnings grow in single digits. 2015, I believe, will be no different. 2015, again, from an earnings standpoint, will be pretty much similar to 2014. Yeah, but I think from the year 2016 onwards, we could calendar year, which will mean FY17 onwards, you could actually see earnings growth for a wider majority of sectors and a larger number of companies participating in the growth. So you could see most of the companies then getting into a new cusp of a growth cycle. And I think it's pretty much, and there are some similarities